The S&P 500, the Nasdaq 100, we need to attack a few things first. And when we look at what's happening on the Nasdaq, let's talk about the day that we've kind of had here. We go to the 4-hour chart. We can see ultimately we were dipping, just coming down lower and lower. It came down to roughly 13.57. Now you go to something like the weekly chart, you can see where this level is established from. And you come back to realize this was locally back here where the body of that candle was back from August. You find support around that region, as you can see right here, and you push back up. Now, we go to something like the 4-hour, go back and look at the action, and ultimately you're pushing back up now. Now, I don't want to sugarcoat why you're moving. You're moving heavily because of what NVDA did with these massive earnings beat, okay? That is ultimately what's driving us up. And that's kind of been the story for tech. That's been the story for the market as of recent. You look like you're fading. You look like you're going to dip. Some earnings come out, and they push you. They propel you. That's been the story of the market. Tech continues to lead and lead and lead. You look at something like ES, we look here with S&P futures, not the greatest movement here, okay? Not the greatest movement, okay? I'm going to tell you that right now. Here on the daily, nothing incredible, right? You push down, you get a wick back up. You know, you mainly wick up if you go to something like the 2-hour, and you can really, let's go to the 5-hour, right? Or the 5-minute, I'm sorry. You can see before close, 2 o'clock, you get a nice push. You reject off of that 41.38. Here in the after hours, you're pushing back down. Okay. Now, this is very interesting behavior as a whole of what we're seeing here. Okay. Now, ultimately, a lot of this comes back down to news, and we have a little bit more news coming out tomorrow that I think you need to be prepared for. But before we get into that content, I have to ask you like and subscribe. It helps out the channel tremendously. If you get anything else, consider doing that. Every single day we make videos for you, so you are prepared to trade and you know what to expect. Also, too, if you're interested in Discord, the link is down below. You can trade with us, be with us all day, every single day, Monday through Sunday, talking about the markets, everything we're seeing. Now, obviously, on the weekends, we're slower, so just understand that. That kind of is the time off. But again, we live and breathe this. Link is down below if you are interested. I recommend full access so you can talk in every single chat and get in the live voice. But again, that's my personal opinion. Also, too, I want to start highlighting this. I get a lot of questions about which broker that I'm using on the market. Interactive Brokers, the link is down below. We are sponsored by them, but we do not get paid if you go and put money on them, right? Like Webull, you have to deposit $100. That's not how we work with them. We just love their product, and they actually have good rates. It makes sense, great fills, and they're one of the only brokers that do this right here. Earn interest up to 4.58% instantly on available cash. So just having cash in your account is generating money. You don't have to have it specifically in a savings or anything like that. You're just always generating money as long as you have cash in there. So again, I would recommend checking that out. Now, back to the market. Now, we're going to get some volatile behavior, but the things that are moving this market, let's go to some fundamentals first. We had your Fed minutes, okay? Your Fed minutes were very interesting on the day. And I put this on Twitter. So the link is down below if you want to check our Twitter out. Fed minutes, and these are the points that I think were the most interesting. The uncertainty on rates going forward, they said they want to pause, but it's very dependent on data. PCE data does come out on Friday, so I think Friday is like all hands on deck, a very big day there. Okay, I want to say that. They're not happy in which the speed of inflation is slowing down and dropping. We've known this, but that doesn't affect if they're going to pause or not. They're preparing to react on a debt crisis. This is the first statement that they've made, the Fed, regarding the debt crisis and them doing something if, things go bad, right? Definitely something, and this was the most important, and they expect a mild recession this year. I also led my thoughts on what's happening with, debt ceiling and what to be watching for there. Now, again, we talked yesterday. It's almost impossible to predict what's going to happen with this debt ceiling, when it's going to get resolved. Now, McCarthy has said, and the White House seems to be saying as well, that this can get resolved in a matter of a day. It's just them coming to the point of, both taking something they don't really necessarily love. And today, the last thing McCarthy said is that they basically agree on everything except increased spending year over year. They want to spend less money this year on the debt limit than they did last year. That's like the last thing on their list. They could be lying to us, so take it for what it is. That's a very big thing. That's the fine line, if you will. But again, I do think this will get resolved. personal opinion. And I do think the initial reaction from that will be good. But the question is right now, do you hammer calls until that time? And again, that's the risky part of this. But looking at ES, you can see you're above 41.30. I think this is the big line in the sand. You can zoom out to around the 4 hour, the daily. When you hold above 41.38, you've had great movement to the upside over and over and over, specifically 4,200. So again, that's the really big level to watch there. The Nasdaq, you're seeing a little bit of a dip here going on. But again, so far you're holding a lot of these levels. I am definitely on the sidelines right here. You have GDP data coming out tomorrow, PCE data coming out Friday, and more Fed members speaking. So I definitely think you don't want to jump the gun and rush into positions. You want to be pretty passive here, in my opinion. So again, that's kind of the role I'm taking here, is being a little bit passive, waiting to see how we react here. We've had a lot of our moves. We've made a lot of money here on the way up, right? So if you've been here on the channel, we've been trading all the way since the break of 13.3, 13.4. We've made all that money. There's no reason to start FOMOing in at highs. Zero reason. You either have your positions or you don't at this point. So again, we like where we're at. We like the movement that we're getting. We continue to also make higher highs and higher lows on the Nasdaq. You can see higher high, higher high, higher high, higher low, continually on every pullback that we're getting. So again, these are things you have to be looking at and paying attention to. And there's no reason to start hammering shorts yet for me yet. Okay. If bad data comes out, then of course, what have we said? If PCE comes out bad, if PPI comes out bad, CPI comes out bad, then you start looking for downside. But until then, you have to be patient. You got to play it by ear. Okay. So we had that downside today. Made sense. You got to balance so far. That's where we're at now. Now, a little bit more. I do want to talk a little bit about Bookmap. Link is down below if you want to check them out. Basically showing you the liquidity that's happening here on the market. Now, again, Bookmap behavior here, very interesting. So we started seeing a lot of sells, and we saw a lot of heavy sell orders yesterday as well. Right? You can still see around 600 lots, 1,000, 1,300, another 1,000 there. It's continued. You saw one buy order, but we'll talk about that here in a second. Even though all these massive sellers and bears are trying to establish positions and push us down, we continue to see CVD, which is overall volume and buying pressure in the market, buying versus selling. We saw it flatline and stay strong throughout the heavy selling. This has been, and I've gone over this quite a bit here on the channel, has been a very good sign of strength or relative strength in the market. You can see we flatlined all throughout, even though we stopped getting orders into basically, power hour, right? End of the day, it's almost like someone knew about NVIDIA, but you went ballistic. 3,000 lots again, 2,000, 2,000. So a lot of big orders coming in near the end of the day, specifically for the upside. Again, I don't love ES. I don't love Dow. It's Nasdaq that's like your unicorn. Nasdaq is the one that's performing. I'm not going to go over a question today. I had one that I had up, and actually I'll kind of show it for a second. I'm going to do this a little bit differently, but I just want to throw this up there just for quick thoughts. And I'm not going to say the whole question. It's not even a question. It's just like, I try to read your guys' comments every day, but sometimes y'all just say like really wild things. But I thought the bulk of this question was interesting because I see a lot of questions on Twitter and social media. Charts of the equal weighted indexes look pathetic. Dow 3 in advanced decline, drastically negative, diverging. And then like he says, this like tornado warning and spotted 2 houses down, and how are people ignoring these signs? And it's like, I don't know what else he's saying, but the first sentence was interesting. So what he's saying though, is you're looking at the overall market and things are down. And this has kind of been the narrative here. Like and when you look at it, XLK is what's carrying you to the upside. If we look at any index, this is primarily tech. You're well above August, of 2022 highs. You're moving up great. You still look strong. If we look at this as a whole, the statement is if tech is the only thing that's up, like NVIDIA, semiconductors, and a handful of Microsoft, Amazon, Google, these AI names, right? Those are all doing really well, but everything else is down. Are you really bullish? Now, this is where you have to be able to disconnect from what you want to happen and what is actually out there. The primary leaders in the S&P are semiconductors and banks. We've seen banks continue to get railed and destroyed. if you're able to maintain and hold the market up and continue to make higher lows and higher highs on something like the Nasdaq with just a very small amount of names. Now, I will say NVIDIA makes up a large chunk of the Nasdaq, Microsoft, et cetera. They do. But what was propelling us on the Nasdaq, back in 2021, 2020, back here when we started pushing up, was small and mid cap names started going parabolic. It wasn't just NVIDIA and Tesla and, Apple and Microsoft. So the fact that you're moving this way with just those names has to make you think, well, what will happen if we just rebound 20% on some of those names? And so that's where you have to kind of think about it. That's not to say that you're full bull and that you have to run and you have to break new highs and have to continue going. It's just to get you thinking about, if those names aren't moving yet, what happens when they do? Like, what will actually happen to the Nasdaq and SPY? Like, if SPY is holding and pushed up to 40-20 with banks at 52-week lows essentially, and the rest of the market in turmoil, and Apple didn't even push up last week really, like, what's going to happen when those names start to bounce again? And I don't think we are asking ourselves that question. Okay. Like back here, like when we bounced back here in, July, June of last year, you were getting bounces across the economy. But right now you look at names like XLI and you're just going down. This is industrials. It was a major leader back in last October, right? So we have to be able to disconnect and connect to what's moving the market, what can move the market, and what's going forward. But again, I'm going to tell you right now, the biggest things going forward is this debt ceiling talk, right? I'm going to tell you right now, especially with what the Fed said. So that's where all my attention is focused on. If they can resolve that, I think short term you have upside. You're going to hate me, but I agree. You have upside that gets resolved in a short term manner before the long weekend, especially. But if anything bad comes out about this and they say, oh, well, we can't fix this and we're not making progress, it comes back down. It's like a chain reaction, a domino effect. It's going to start hitting the Fed as well. And the Fed just made the comment that they are going to have to react and they're going to have to start doing some tightening or some type of action if this happens. And it's going to directly affect their decision-making on the economy. So again, these are all aspects we need to be watching for, because now it's not just one thing, okay? We definitely have to be watching that, okay? So understand that. Keep it on your viewpoint. I want that to be clear. It's also worth mentioning really quick as well that, again, this is just one more thing. Fitch ratings, and you're continuing to see this. There's greater chances that the debt ceiling will not be raised or suspended. Every day, this is going to go up and up and up, and the market's going to start pricing this in more and more. Again, negative effects on the market. But again, I can only say this so many times. There's no reason to counter trade the trend while you're making higher highs and higher lows until you get data. If PCE data comes in bad, I'll go short. If PPI, CPI data comes in bad, I'll go short. If the debt ceiling falls through, I will go short. You'll have the opportunity. It's just like we told you back here when you broke above, 12.7, right? 12.9. You had the opportunity again to go long. You broke above, you retested. We went from 12.8 all the way up to 13.9. Okay? You will get the opportunities. And again, I think people are so, even me sometimes, we're so obsessed with short-term satisfaction and gratification in the next day, tomorrow, or this week, right? Which we kind of have tunnel vision and we don't look at the grand scheme of things. Like, again, we talked about the Nasdaq on the weekly when you were bull flagging here and you broke up. And again, it was almost like we didn't want to believe it, or some people were just like, well, short-term, we're bearish, and you missed out on all the opportunity. But again, I just say, the downside, I guarantee you will have opportunity after opportunity after you will have it 100%, tenfold. You will get your opportunity here. I promise you. Again, you will. Every single time there's been a short-term opportunity, I've never gone short at the top. And if you look back over the past year and a half, we have caught, I would say, about 80% of the downside moves. And that was just off of retest or confirmation of the downside. We've never had to open our risk up exponentially, and we've never had to risk getting over leveraged in the market. So understand those visuals and those viewpoints. Going into Cheddar Flow as well, just really quick going over some of the flow. I haven't done this in a few days, so I know some people are interested. Tesla, Pretty wild chain. I'm assuming this is someone selling puts here at like 400, 450. So again, I'm not too concerned about that. Nothing to really worry about. SPY. You saw some splits and the chain. Me and Cajun, if you're in Discord, we're primarily in commodities where we talk about fundamentals there. The bearish chain and the bearish options are dated. They're not short dated. The short dated contracts are more neutral, if anything, favoring the upside, which again has to have you curious about tech in the short term. But if you look at SPY and Qs, a lot of the bearish flows for December, in which you continue to see December's chain to stack up and up and up, which makes sense there as well. Qs, not a lot here. Calls coming in. I would say nothing too exciting here. Nothing that I'm like necessarily worried about. IWM, you saw puts come in. We'll talk about IWM here in a second, but ultimately that's where you're at. IWM, remember we got to the 200 SMA yesterday. We touched it and rejected hard. Shorts definitely trying to keep this down. The last thing I'll talk about is the VIX. I said yesterday, if VIX gets to 20, you got to be concerned. I think you should be concerned if VIX at 20. Next level, 24. If you get above 24, we've seen a lot of downside come from the $24 level. So next level to watch there. The DXY continues to rip to the upside here on the daily. Definitely cause for concern in lining up with VIX. But yes, something to watch for there. We also did see yields on the day take a little bit of a dip to the downside. Nothing bizarre, nothing crazy, but still really tracking, especially the 2 and the 5 are pushing up higher, which is indicative of a downside move most likely, or the fact that they're pricing in rate hikes to continue coming. And anytime we've seen yields pump, we have gotten some downside. So again, this is why I'm on edge when I look at the market as a whole, but I'm not pushing into the short yet based on not getting confirmation. Can only say that so many times. This is my opinion, what I'm doing on the market. If you have questions, leave them down below. I'll see you tomorrow. Have a good one.